Hello traders, my name is Logan with Funding Talent, and in today's video we are doing the market forecast for April 26th. In this video, what we hope to do is highlight the best fundamental drivers for you to stay away from in the upcoming week, and also the best technical setups for you to keep your eye on in order to capitalize on. So without any further delay, let's get right into the video. Hello traders, so here we are on our slideshow, and as always, we are first going to start off with this week in our fundamental news. But a segment that we are going to be adding is the trade history from last week's market forecast. So let's see what we got last week. Last week, from our trades that did hit either stop loss or take profit and therefore were activated, were AUDUSD. That was our only trade last week that had our stop loss hit, but we had our take profit hit on pound Swiss franc, Australian dollar Kiwi, and pound CAD. Our take profit got hit on all three of those trades, so overall, very profitable week. You would manage that loss very, very easily if you did incur it at all, and hopefully everybody had a great week this last week. I know that we did at Funding Talent, and I did personally. So let's dive into our fundamental drivers. We're going to start the week off with some JPY news on Monday. This is tentative, so it's going to be going on all day pretty much, and that is going to be high impact for the JPY. Then moving into Tuesday, we have some AUD news at 9:30 p.m. EST for CPI and trimmed mean CPI numbers. As well, on Wednesday, we have OPEC meetings, which is very important to keep aware of. So on Wednesday, be careful. Don't risk unnecessary amounts, and be sure to tighten up your stop losses. We also have some USD news on Wednesday at 2 p.m. and at 2:30 p.m. Both of them are going to be the FOMC meetings. And then pretty much for the rest of the week, the only thing we have to worry about is 8:30 a.m. for the US dollar on Thursday. Besides that, no news on Friday, and as you know, not this upcoming week, but the week after that, we will be going into NFP week, so that'll be a different story. But this last week didn't really have any USD news. This week is a little bit, so not too much to be careful of, except for Wednesday. Wednesday is going to be the main day to keep your eye on, and just make sure you're not risking too much, and you're not shooting for anything that's unrealistic. This week, stocks climbed after a strong economic data added to evidence that the recovery is gaining momentum, with traders also assessing a batch of corporate earnings, and the dollar also retreated. The crypto market this week suffered some losses on Thursday. Mainly, we did see that retracement on pretty much every single coin. This part is a healthy correction. Please do not get this confused, okay? This is not something to be panicking about. If it turns into a reversal, we will absolutely be covering on this video, but in this week alone, it just looks like a correction, and I'm actually starting to look more bullish on the market. But if you've been following us, you know that we've been expecting this correction to happen. We've been expecting some kind of retracement because all healthy trends have them. So I would not be worried at all. I would not be looking to sell position. Biden also released his new plan for capital gains tax, which increases capital gains tax to 40%. This is only going to apply to people that are earning over $1 million a year, but it is interesting to see if this will get passed. So for our market sentiment this week, we're going to be looking at a risk-on market sentiment. We're starting to see good news slow down a little bit. As you know, we've had a lot of good news in the last couple of weeks and months, and it's a little bit interesting because COVID cases are starting to rise now. We're starting to see some lockdowns get enacted all over the world, so I'm interested to see what's in store for us in the next couple of weeks. But as of right now, we're still looking at a risk-on market sentiment. And for our newer viewers and our existing viewers who don't exactly remember what that means that expectations are higher for further economic growth. This means that the Australian dollar, the euro, the pound, the CAD, and the New Zealand dollar can be seen to appreciate if we continue on to this risk-on market sentiment. So looking at DXY, we were wrong about finding the bottom of the second wave, which actually is okay because we didn't execute a trade. There was no actionable trading decision. Again, this was just analysis we were looking at. But what we did see was after this correction that we had, this ABC correction right here, we've started an impulsive wave lower, which actually is bearish for the dollar. So my bias is going to shift to bearish on the dollar, but we could see some retracement as we were just talking about retracements in crypto. Corrections are just part of healthy trends. So this could be our first wave down possibly. Looking at a first wave down, a second wave higher, and then a third wave to continue our bearish downtrend. But as of right now, we will continue with a bearish bias. Looking into gold. Gold finally started to get really good profits as of our two entries right here on the 8th of March and on the 30th of March. Now we are reaching closer to the top of this rectangle right here, but we are still part of this channel on the daily time frame. I'm still expecting prices to appreciate much higher than they are now, so my bias is going to remain bullish on gold. This is a trade that we've been active for a couple of weeks now, so we're going to continue to keep our eye on it. Moving into Ethereum. So with Ethereum, we actually did get our 5-wave impulse move higher, which we were looking for. Now we're looking to see for our next impulse wave higher to take us to our profit zone. It's going to be interesting what happens because, as I said, we have been correcting in almost all of our cryptocurrencies. Ethereum has been performing exceptionally with not really a lot of corrections compared to the other coins. I think that this is due to a lot of institutional buyers going into the market and also people starting to realize that there are downsides to the main player in the market. Bitcoin. Bitcoin is not exactly what it seems to be. There are some large downsides that nobody's really talking about yet, but it's starting to come into the mainstream media now. Bitcoin's power consumption, for example, is more than Argentina, New Zealand, and the United Arab Emirates. This is ridiculous. Also, the main reason of this crash was because 65% of all of the mining power in the world is controlled by China. One power grid went out, and it dropped the market significantly because new Bitcoins were not being mined. The mining process essentially more than half stopped, and that's what caused this fall to really happen. So there's a lot of downsides that people are starting to be aware of, and I think Ethereum is the next answer. But my bias is going to remain bullish on Ethereum in the short to medium term as well as the long term. Moving into Bitcoin, I think that we are looking at a larger Bitcoin correction here, and my first take profit reversal point for this correction was 45K, which we're starting to get down to now. We're around 49 right now with some very strong bearish momentum. As you can see, we had an A wave right here, a B wave, and then a C wave to follow us through. So my first reversal point is going to be the 45 level. If we break through this zone right here, from 45 to 43,000, my next point after a correction, because we're going to see a correction of this this bearish trend, once we see that correction happen, I could potentially see Bitcoin coming back down to the 30,000 level, which is a bit extreme, but it is in the cards and definitely possible, as this is the 61.8 retracement of the last impulse wave, which would actually make sense, and this would still strengthen our bias. This would mean over a 50% correction, but this makes sense, right? Because corrections have to happen, and then once those corrections are done, the next impulse wave forms. So if we have a 50% correction, which would be a 61.8 of this last impulse wave higher, then we could expect another impulse wave higher. Either way, I'm going to be bullish long-term on Bitcoin, but in the short term, I am bearish. Looking at S&P, we put some analysis on this for you guys last week as we were getting to the top of this wedge and this channel. We bounced off of there, and now we're just bouncing around the middle part of that channel, but nothing really set in stone yet. It looks to me like we could be forming a head and shoulders after we got our take profit hit last week on NZD dollar. So I'm going to get rid of this profit zone and show you guys what I'm looking at. As you can see here, it looks like we are starting to form a bit of a head and shoulders. Here's going to be our left shoulder, our head, and our right shoulder could be forming right here. And then come lower and then take us lower. This is a reversal pattern, so this makes sense. We had a correction of our last impulse wave down, which was this wave right here, right? So this is our impulse wave right here, this whole move here. This was our correction, and then this reversal pattern of this correction would be in line, so it would be a continuation pattern of our last wave in the larger time frame, but this is a lower time frame entry, so this would be a reversal of the correction, which was bullish, to continue in our bearish trend. I hope that makes sense for you guys. So we're going to be looking for this right shoulder to complete, and then a break of that neckline before taking a trade. USDCAD has been very, very interesting. So we were actually bullish on USDCAD, and as you can see, we got to the top of this channel. We've now been forming a rectangle pretty much from this high here to this low down here. We've been consolidating around this low, and we've been actually able to make some very nice consolidation trades on this pair because we've been respecting these zones so much. So until we break these zones, we're going to be looking for more consolidation entries, where it's pretty much we're just playing this range from this low to this high up here. At the point where we do break, that will be the continuation of our next trend. So if we get a break lower, what we can expect is something like this, right? A break lower, a retest of that zone, confirming it as resistance now, not as support, and then a move lower. And then you would see the opposite thing happen on the top, right? So we would see a breakout here, and then a confirmation of this resistance. Now it's acting as support, right? Because it's resistance right there, right here, and now it would be support if we come back and test it again. And then what we could expect is another bounce higher once we get that confirmation. But until then, we're just going to be playing consolidation trades, bouncing it off the middle. EURGBP, we've been extremely bullish in the last couple of days, coming back up to this top right here. So my bias is going to be shifting bearish because I think we will come low off of this high that we've been setting over here as of the 25th of February. This has been this resistance fractal we've been respecting, and I do not think we're going to break it now. But if we do, the same thing will happen on USDCAD, right? So we're going to see a breakout here, and then be able to trade it to the upside. But if not, remember guys, the most important thing we're going to look for here is confirmation. This is just analysis until we have confirmation of a trade. So
We're going to be having our bias shifted bearish right now because we could be coming off of this zone. But of course, that bias can change, right? We can make an active trading decision long if that opportunity presents itself. We're not set in stone on any one direction, which really is our main strength as traders, is finding market context and being able to adapt. So that's what I'm telling you to do here. Right now, shift your bias to bearish because we can expect prices to come off of this resistance fractal, but don't be surprised if we break higher. Just look for confluences to make a trading decision and then act. This is just bias, which we have to combine with context and confluences to make an active trading decision. We should clip that. That was good. So for EURNZD, our take profit was hit on that last week, so I didn't want to mark that out for you guys this week, but we finished our ABC correction, so we're going to be looking for our next impulse wave higher. Once we find our next impulse wave, that will be where we look for trend continuation patterns. And my chart of the week is going to be XRPUSD. So we finished our ABC correction after our 5-wave impulse move higher, and I think we will be coming up from here. So we had this ABC correction play out, and now I'm going to be looking for our next impulse move higher.
So traders, that was our market forecast for the week of April 26th. I hope that you enjoyed the video and you could take from it the best fundamental drivers to stay away from in this upcoming week, and also the best technical setups that I'm currently keeping my eye on in order to capitalize on, and hopefully you can too. If you're not already following us on all of our social media platforms, be sure to do so because we're releasing new content every single day across all of our different platforms. And if you're not already subscribed to the YouTube channel, be sure to do so because we're releasing videos just like this and others every single week for you guys on Monday. So, as always, on behalf of everyone for Funding Talent, happy trading.